Candle range theory trader back with you with another video just talking about small candle ranges. This CRT method is used to explode profits. So this is something that I haven't seen a lot of people talk about. So let's just get straight into it. So what this video is going to cover is what candle ranges to look for, how the ATR candle size indicator does the work for us, the decision flow slash checklist for trading this method, and some real chart examples. So remember that if you are a candle range theory trader, your number one job is to identify high probability candle ranges to trade. Now, if you've been following this channel, you know that I talk about ATR candles and how we look for those big, massive candles to expect a reversal off of them. But at the end of the day, we have to remember that all ranges are not created equal. We're not supposed to be trading every single candle range, even though every range is a candle and vice versa. We want those high probability ones. So these are the candles that we want to be looking for. Number one, we're going to start with the daily chart in this example. Okay, daily chart and daily chart only. All right. And what we're looking for is a candle that has less than a 50 pip body, 50 pips and below. All right, and I have to give credit to the person who I got this concept from, a little different, but Steve Morrow. Okay, I want to give a shout out to him. All right, but anyway, 50 pips or less for the candle body. I don't care about the wicks, I'm only looking at the body. The smaller the body of the candle is, the better. All right, and then after that daily chart closes, we're looking for a money candle on the daily chart, on the 4 hour or the daily chart, that's going to give us that money candle that pokes above or below the range and closes back inside of it. So this is a 1 to 2 candle pattern. I'm going to show you what I mean. But we don't have to manually measure every single candle to see how long the body is. The ATR candle size indicator is going to do that for us. So let's go over to the charts and see how. So I'm going to go over to trading view now, and you'll see here I have that trading view chart on the screen and the ATR candle indicator. If you do not have this indicator, all you'll do is go over to indicators and type in ATR candle size, and it'll pop up right there. It's by Mikhail 00. Okay, that person right there. That's the one you want. Once you pop it on the chart, on the bottom, and I'm going to make this a little bit bigger, but it's going to be hard to see. On the bottom, you're going to be monitoring these two. Well, actually, this number right here. You'll see one number to the left and one number to the right. And it's already labeled. It says the ATR, which is the average true range of the candles, and the actual candle size of whatever candle you put the mouse over. So if I put the mouse over this candle, if it's small, the number says 64. If I move it to the next daily candle, it says 16. So it's not talking about the total candle size. It's only talking about the top of the body to the bottom of the body. So just to confirm that, if I measure this candle right here from the top of the body to the bottom, it comes out to about, yeah, it's right at like 16.8 or so. And it says 16.2. So that's what this number is giving us. All right. So that's the candle size indicator. So every time a candle closes on the daily, all you're going to do is filter to your charts, put the cursor over each candle and see how big the range is. And we're looking for 50 and below. Even if it's at 51, that's a no trade. We're not interested in that range. Okay. So that indicator makes it super easy. So here's our decision flow for the trades we're going to be looking for. Number one, the first question that we ask is the daily candle less than 50 pips? Okay, is this number right here on the ATR, is it less than 50? Okay, if it's not, there's no trade. If yes, we can continue with our decision flow. Has a money candle presented on the 4-hour chart or the daily chart? Okay, if yes, we continue. If no, there's no trade. And remember, the money candle again pokes above the range and closes back inside of it. Once the money candle does appear on either a 4-hour chart or the daily chart, if the candle closes close enough to the top of the range or the bottom of the range, go ahead and enter that trade. You're in at the close of the day or the close of that 4-hour candle. If the money candle is kind of far from the top or bottom of the range, we want to wait for a 50% retracement of the money candle to enter. Okay, and I'll show you this. So just be patient and I'll show you how that looks. So this is a brief example though. Okay, so we start with the daily chart. So ignore the candle before. The only thing we're focusing on is this first candle. This candle right here has a 17 pip body. So to go back to our decision flow, is that less than 50 pips? Yes. So we continue. The next thing we look for is a money candle. And this is pretty much the full result. But the money candle appears right here. And you actually got two. But this one right here at 5 a.m., price pokes below the range, closes back inside it. That's all we need to see to validate an entry. Now, price does come back a little bit more right here, but again, it closes all the way up here. All right, so this is just kind of stop out anybody who may have got the direction right, put you in a little drawdown. But as you can see here, this had a 100 pip breakout from the entry that we put in at 5 a.m. Price just took off. Okay, and this is the daily chart, how that looks. Okay, so this is the range candle. Then you have a daily candle, poke below the range, close inside of it. So you could have also waited for Friday for that big expansion to the upside. So three candle pattern by the time it's finished. One candle being the range, the next candle being the money candle, last candle being our move that we're expecting. We want to be in before all of this takes place. Okay, because we have to remember the logic behind this is small candles can lead to big ranges. Okay, so we're looking for small candles to lead to big ranges. So let's take a look at some more examples. Here's another example. Okay, so daily chart, we start ignore everything to the left. All right, we're only looking at one candle, this range right here. Okay, we don't need a daily bias, we don't need any of that. We're just looking for a one good range candle, which is under 50 pips. Okay, so that's this one. All right, so 23 pip range of the body right there. Okay, that's step one. Then you wait. Okay, the next close of the next day, that was Tuesday. Wednesday gave us a money candle because price poked below and closed close enough to the range whereby, okay, we're good. We can get in at the close of this candle, all right, at the close of this candle on Wednesday, because this, if we notice, the money candle also made the low of the week, and we like to see that, all right. So that's good enough for an entry. And then I'm going to show the finished product here. Okay, so this was Wednesday, Thursday, and Friday gave us, see how this explosive move up. But it started from this small range here. Small range leads to big ranges, big moves, big explosions. Okay. And you also could have got in on Thursday because, as you can see here, there was a little bit of a retrace, but the low of the week held. And with a lot of these, you will see price break out of your established range because it's so small. So imagine it being like just tightly packed up. That's why I had the thumbnail of the young lady holding the box in her hand, because you're looking for these small packages to give you a big surprise. And obviously, this is the big surprise with a 150 pip move over 2 days. Okay, so at $10 a pip, you're talking about $1,500 in 2 days. So that seems pretty good to me. All right, so let's look at another example for a short. Okay, so what do we look for first? Remember, we're looking for the range that's 50 pips and below. The smaller the range is, the better. All right, but it doesn't end there. So this is our Thursday candle right here, which is our range. So this is the high of the range right here. And then Friday gave us the money candle, meaning that price opened, poked above the range, but closed back inside of it. Okay, so we're not trading this day. We're just waiting for this day to finish. All right. If you want to try to catch this high, that's up to you. It's just that a safer bet is going to be to wait until price actually does close back inside the range. And then the next day, which would be in this case be a Monday, you would go ahead and enter the trade. So let's see how it looks and it turned out. So this went down to the bottom over 93 pips. All right. 93 pips. So it started from this small range. This was Friday. This small candle here was Monday. And then Tuesday is where the really big move came here. But again, it starts from this small candle, which leads to the big candle. Sometimes it'll take a day or two, but I'd say these trades, you really shouldn't be holding them more than 2 days. Your move should come within 2 days. 1, 2. Okay, Monday, Tuesday. All right, or up this one right here. Okay, Thursday, Friday. This is enough. Okay, this is your exit right here. Bottom of the range, or even sometimes it may break out. I didn't include how far it went down, but I mean, you get the point. You know, at $10 a pip, that's $930 in a couple days. That's decent. Okay, so let's look at one more short example here. So again, well, step number one, we look for our range candle that is 50 pips or less. Thursday, this candle right here, okay, where the lines are, top of the range, bottom of the range, that gave us a 18 pip range. Love to see that, nice and small. All right. The next day, Friday, gave us the money candle where it poked above the range and closed back inside of it. All right. So you see price just getting tighter and tighter. So eventually it's got to expand one way or the other. So, but our belief is that because it poked at the high of the range and closed back inside of it, we have a downside bias. So this money range was sizable though. See how long these wicks are? So because it's so far from the top of the range, we want to wait for a retrace. Okay, for a retrace for it to get near the 50% range of the money candle, and then we look to take our entry. All right, so here's Monday. All right, this big blue candle is Monday. See how price went slightly above the 50% level on that day, and then tanked, and it tanked 174 pips. Now I don't know. This may have been a news day, so I don't know. But sometimes news will be ahead of an event. I'm not going to advocate trading news. I'll just say that use your best judgment. All right, but starting from the small range, big range. That's all we're looking for. Okay, that's all we're looking for. Don't overcomplicate this. That's really it. Okay, so in conclusion, use the ATR candle size indicator to find those small ranges on the daily chart. It'll take you like 2 minutes to go through all the charts to see that. All right. You don't have to do 50 pip ranges. If you want to only do 25 pip ranges and below, that's fine too. There's nothing wrong with raising your standards. Be selective. The smaller the range is, the better. But the main thing you're waiting for is the money candle. All right. The money candle is the main thing to wait for. The range candle is not enough. All right. The high or low of the money candle has to hold for the trade to still be considered valid. And if the money candle makes the higher low of the week, that can be a great sign that your trade is going to play out. What you can also do if you're using TradingView is set price alerts. So it'll get an alert to your phone, on the computer. It'll make a little ding sound. You can look up how to do that. It's not hard at all. And that way you're not staring at a chart all day. Just look for your levels. For instance, if you're for this trade here, let's say this trade closes, set a price alert for the 50% level right here. And then that way, once you get the alert, then okay, now it's time to trade instead of sitting there waiting for price to hit it. All right. That's a way to manage your time effectively. Because if you sit at that chart too long, you'll probably start pressing buttons when you shouldn't be. So patience is the key. So if the money candle closes far from the top or bottom of the range, remember that you should wait for a retrace to the 50% level. Okay. Wait for the retrace. If it's too far from the range, your stop loss is going to be too big. It's really not going to be worth taking the trade because we want big gains. Okay. You can also increase your odds by requiring the money candle to follow the range candle. What do I mean by that? What I mean by that is this. Once you identify a range candle like this one here, if the money candle is not the next day, trade's no longer valid. All right. Let's say the money candle will come 2 days later, where price raises the high and then closes back below it. While that can happen, probability drops. You want the highest probability for the move to come immediately, not later on. Okay, so that's a requirement that I have that I just really started implementing. I used to be a little more permissive when it came to money candles, but now it's like, no, give me the money candle immediately so I can go ahead and take the trade. If you don't give me what I want when I want it, I'm going to another pair that's going to show me what I want to see in the manner and in which I want to see it in the time frame. Okay, I'm not going to wait for 2-3 days for a money candle to pop up only to still lose. No, I want the highest odds, and the highest odds are the very next candle, the very next day needs to be a money candle. That can help increase your win rate dramatically. Okay, and more importantly, your profit, not just your win rate. All right, so because it's a daily chart, these setups will take time, so you've got to be patient. This isn't for scalpers. If you're a scalper, you need to watch the video about scalping. Okay, this is more so for day traders and swing traders. So I appreciate you watching. Please subscribe, and your trading will never be the same. That is my promise to you. I appreciate your time and attention, and if you're still here, I definitely appreciate you. So I wanted to give you one more bonus. We just have a quick example from EU where we have a 8 pip body right here on Wednesday where the range is located. So see here, this little body is very tiny, 8 pips. The money candle goes all the way up here and then closes back inside the range. But see, it's a very big money candle. So what does our rule say? If it's big, we have to wait for a 50% retracement. And we would have got a sniper entry on Friday. So Friday would have been entry here, and then it tanked for the rest of the day, and that would have been good for 50 pips. Okay. So this is what you're waiting for. So this would have been a good example where you just set a price alert for the 50% level. Your stop loss still is going to go above the money candle. Take profit can be below the candle range if you'd like. You just kind of take what it gives you and just be done for the day. 50 pips, that would have been fine for me. No need to really hold beyond that. Okay. But that's all you're looking for. Okay. So remember, small range, money candle, take the trade if it's at the proper level. And that's it. Set your stop loss, set your take profit. You're done. 3 easy steps. You will not see an easier trading plan than this one. So again, I appreciate you and I hope you have a great rest of your day.